Hi, we are going to start our lesson now. Okay, so this chapter I'm going to explain to you the whole accounting flow. So now you got to imagine that you are a small business owner. Okay, so for simplicity purpose, we are going to do everything using manual accounting system. That means the old way of doing things for easy understanding. Okay, so when I have a small business, whatever, a shop or anything, whatever business I have, first thing is I must have a cash book. That means whatever money come in or money go out, I will record in an exercise book and I label it cash book. Okay, I will have a cash book for cash. Okay, as stated here, I will have a cash book for cash to record my cash in and cash out. And if my business or my company have a bank account, I will have a cash book to record money going into my bank account and going out of my bank account. Okay, so I will use cash book. Okay, so we have to understand the traditional way of doing things because any using of accounting software or accounting software to record is actually based on the manual way of doing things, because the computer people will learn from the accounting people on how to do things, then they convert it into so-called so-called whatever computerized accounting system. So for simplicity purpose, because computerized accounting system is based on a manual way of doing things, so we just need to understand the basic way, the manual way, the traditional way of recording. So if I have a business, I will have a cash book. That means I take an exercise book and I label it cash book. So inside my cash book, I will have, okay, inside my cash book. So now inside my cash book here, I will have this page recording the receipts and one page recording the payments. Okay, so that means any money come in, I will record in this page. So and then any payments, I'll go and record in this page. I mean, for simplicity wise, I suggest every day we start with a new page. So for example, these are all my receipts and these are all my payments. So my receipts total 350 minus my payments. The balance will be 204. Okay, all my receipts minus my payment, the balance will be 204. That's why both sides will balance. Both sides, all the payments plus my ending balance will be equals to this. So my ending balance will be tomorrow's beginning balance. Okay, so when you learn in a typical T account format, you do it, but so now over here you understand what is this cash recording all about. Okay. Um, okay. Okay, so then now we have learned about cash book. Okay, so that means book of prime entry is book of original entry, or we call it day book. That means the first book of account, first book that we record our accounts. Okay, then we will have some customer who will come and buy from us on credit, and some customer that we sell to on credit. Then now we will record this. Okay, all these credit sales, that means those customer that buy from us on credit, we will record in a book called sales day book. Okay, sales day book. Okay, all this we group it. We call it sales journal or subsidiary books. This is the second category. Okay, so one of the subsidiary book or specialized journal is sales journal. Another word for sales journal is sales day book. Okay, so in the sales day book, we will record our credit sales. So how does a sales day book looks like? It does not look like a typical T account format. Okay, a sales day book is just a simple book, exercise book that you label it sales day book or sales journal. Then I suggest okay, we do it day by day. Okay, so this is the date, and then you write the customer's particular. Okay, this is the customer name, what they buy from me, and then this is the amount that they buy from me for. Okay, some people may like to add an invoice number here. You can write as much details as possible. But for example, if I'm just a small provision shop, so I don't need so much details. So these 3-column details is sufficient for me. So I'll do it here. Then every day I will total this. Okay, so this is day first of January 2015. This is 2nd of January. So every day I will have a total. Every month I will have a total for the month, and every year I will have a grand total of all my credit sales. So this is this is a sales day book is or sales journal to record my credit sales. Okay, so similarly, if I purchase on credit, my purchase day book or purchase journal will look very similar with my sales day book. Okay. Then how about some customer that return their goods? So if it's a cash return, that means they return the money and the business pay out the money. So that will be recorded in a cash book. Because any money come in, any receipt or payment by the business will be recorded in a cash book. But what if a customer, a credit customer, return the goods and they said offset on account? That means offset against the amount owing to or from them. Okay, then imagine if we go and do some kind of cancellation or use some liquid paper and liquid this and then put a new amount and write some remarks, it's going to be very messy. So we will have another exercise book that we label it sales return day book. Another word for sales return day book is sales return journal. Okay, so I will have another exercise book for this. So this is the way that I'm going to record it. I'm going to put my date and then the customer name and then put some of the details of why they return. Okay, and the amount. If your business is bigger, you can put more details. You can extend your exercise book. You can buy a bigger one and then put their credit note number or other details. So if my business is small, I think this is sufficient for me. So every day I will have a total. Then every month I will have a total, and every year I have a grand total for all my sales return. Okay. So now, okay. So now whatever receipt and payment I will record in my cash book, and then all the credit sales and credit purchases of my normal sale and purchase of goods of my business goods I'll record in my sales journal, purchase journal, sales return. Those who return the goods and offset against account, I will put in the sales return in my sales return journal, and similarly purchases that are offset against account, I will record in my purchases return journal. Okay, so general journal is to record anything not in 1 and not in 2. Anything that you can think of, okay, not in number 1, not in number 2, will be recorded in number 3. So what can you think of? Okay, so general journal is to record anything not in number 1 and not in number 2. Okay, for example, okay, general journal, I put another exercise book and I call it general journal. So this is how my general journal will look like. For example, bad debt written off. Okay, so general journal, normally we will do the recording of general journal at the end of the month. We will do it once at the end of the month. We check through everything and then we record it. Of course, any day if you need to record in the general journal at any day, you can. Okay, but normally, practically, accounts people will record the general journal end of the month mainly. Okay, for example, bad debt written off. Bad debt written off is not in category 1, not in category 2, so it will be in category 3. And what are other examples? Purchase of fixed asset on credit. Okay, so now if purchase of fixed asset on cash, by way of cash, I would have recorded in the cash book. You see, fixed asset is different from my goods. Okay, goods for resale. It's different from my goods for resale. So I wouldn't record in my purchases journal. So I'll record in my general journal. Okay, so another example that I can think of that I would record in general journal would be okay. Okay, would be like correction of error. So this is something that I've omitted from the books, and I only realized that this was omitted at the month end. I realized that this transaction was omitted. So I record in my general journal, and then correction of error is not in category 1, correct, not in category 2, then correction of error you will record in general journal. Okay, general journal records anything not in this category and not in this category. Okay, so then now when you have a when you are doing a small business, for example, okay, first you will have a source document. Source documents are documents that you transact business with outside external party, like invoices, receipts, check counterfoil, all this. So from your source document, you will post to your book of prime entry. So book of prime entry, all these are book of prime entry. I've explained to you, these are the books of prime entry. And from book of prime entry, we record into ledger. Okay, so now you must understand that you know, we have the source document, like in accounting lesson 1 I've explained before. The purpose is at the end of the year you need to produce a profit and loss account and balance sheet because you need to submit income tax. Okay, so from your source document, okay, practically you post to your book of prime entry. These are the first book of account. First book that you record your accounting information. You see the thing is everything we do has a practical purpose. So we can see the practical purpose of a book of prime entry here. We post in all these books is actually to assist the business owner to keep track of all these transaction, credit purchase, all these credit sales. You can monitor your customers and all this, and then of course all the receipt and payment you record is to monitor your cash balance, monitor all your receipts and payments. So everything we do has a practical purpose. So now I ask you, now from the book of prime entry, can you easily and conveniently produce your final accounts, your profit and loss account and balance sheet just from your book of prime entry? Probably you can, because if your business is small, you actually don't need anything else, because if your business only have just a few transactions, you can disregard the ledger and the trial balance. You can straight away draft your profit and loss account and balance sheet straight away from a book of prime entry. But if your business gets bigger, that means things are more complicated. So how are you going to do your profit and loss account and balance sheet from your book of prime entry when your business gets bigger? So for example, every month you pay rent and pay all these stationery, coffee powder and everything. So I need to put my rent expenses, for example, my rent expenses in my profit and loss account under rent expenses. So am I going to use like for example a green highlighter and then highlight all the rent expenses that I pay every month, whether by check or by cash, and then probably I put a star somewhere. Then after that I come to stationery expenses, then office expenses, all these, then I use another color to highlight and I put it. Yeah, it's getting more and more messy now. You see the problem now. So in order to organize my work, I will compile, for example, all my rent expenses in a general ledger. Okay, no, now let me help you to see that how this ledger. Okay, how many ledgers that we have in this in our company? First, we will have a general ledger. So let me explain how a general ledger will help you make your work neater and more organized. Okay, now we see. Okay, so we have another exercise book called general ledger. Okay, so now in the general ledger, we have this kind of T account. I'm sure those who have studied accounting before, I'm sure you have come across all these T account. So all these T account, for example, rent expense, stationery expense, all these will be compiled in a exercise book called general ledger. We named it general ledger. So you see, from the book of prime entry, okay, this is my cash book. So every month I will pay rent. So I'll pay rent whatever date. Sometimes sooner, sometimes later. Okay, so I will look into my cash book and copy. Whenever I pay rent, I record in my cash book. Then I also record in my general ledger under rent expense. Okay, so these dates are what I copied from my cash book. Okay, whatever cash payout that I've recorded in my cash book, I record here in my this general ledger. Okay, so at the end of the year, I want to calculate how much is my rent expense that I will transfer to my profit and loss account. Okay, I total this 12,000. Okay, these are all my rent that I paid out. Okay, and this is my year end, 31st December 2015. Okay, my rent expense will be 12,000. You see how neat the work can be with the help of a general ledger. Okay, so would be all the other expense and revenue. For example, I will also have another account called sales account. Okay, sales account also I will get the information from the book of prime entry from my cash book, from my sales day book, from sales day book. So all these sales will go to my sales account in my general ledger. Okay, so then I will also have another account, stationery expense account. I will have a salary account, salary expense account. I will have a sales account, purchases account, so that I will compile all the figures, all the expenses and revenue figures that I can transfer to my profit and loss account. So um, in my general ledger also I will have a debtors account. In short, maybe it's a debtors total account or summary of debtors account or just a debtors account. So if my business is small, I will okay, if there's a beginning balance, I will find out how much my customer owe me at the beginning of the year. Okay, then I'll compile the total. I'll compile the total from my book of prime entry. You know, just now I have explained that in the sales journal, at the end of the year, you will have a grand total of all the credit sales. So you just flip to the last page and post your grand total in your debtors control account inside your general ledger. Okay, so then total sales return also you get from your sales return journal. Okay, sales return journal, you will also have a grand total at the end of the year. So this debtors control account, I will only do it once at the end of the year. Okay, total cash and check received from debtors for the year. So this one I can calculate it from my cash book. Okay, so then I will have my ending balance. So similarly, you will have a creditors control account. Okay, now we see. Okay, so all my ledger will be compiled in a general ledger. So ledger is same meaning as account. Account means ledger. So this is a stationary ledger or stationary account. Okay, all my accounts will be compiled in my general ledger. Okay, so then what other ledger does my company needs? Okay, ledger means account, means you have a debit and credit side. So the second ledger that we have in the company is cash book. You see, in our book of prime entry. Okay, so this is my cash book. Okay, this is my cash book. You see, the cash book already looks like a ledger. So the receipt side is the debit side. This is the payment side is the credit side because it already looks like a T account. So that's why I don't need to redo a cash book ledger. So this cash book will serve as a book of prime entry as well as a ledger. Okay, so what are all, so that means now I'm explaining what are all the ledgers in a company. One is the general ledger. I have explained general ledger. So a cash book is a book of prime entry as well as a ledger. Okay, so book cash book, because the book of prime entry, like what I say, is the first book that you record your accounting transaction. So the cash book serves as a book of prime entry as well as a ledger. And then if your business is quite big, you need to have debtors ledger. Okay, you need to have a debtors ledger. Okay, so now I want to jump a bit. You see, now I have a reasonable size business, quite a big business, not a very big, but quite a big. So how am I going to organize my accounts department? Okay, when I hire an account, so I probably, ideally I want to hire 3 accounts persons. Okay, one will take care of the general ledger. So in the newspaper, I will advertise that as I need this person to handle a full set of accounts, because general ledger, the person handling the general ledger will also handle the debtors and creditors control account in the general ledger. So why I call it full sets of accounts, that means this person will handle the general ledger and will do up the trial balance and will do the profit and loss account. So I expect person number 3 to I will advertise it a full set of accounts, because person number 3 will do the general ledger, the trial balance, and the profit and loss account for me, either every month or every year. Okay, so I need another person to take care of the debtors ledger. Okay, what is a debtors ledger? A debtors ledger is another exercise book that I need this person to do, and then this person will do up all the individual debtors account for me. You know why? I want to monitor carefully, monitor closely how much my debtor or my customer owe me. This is very important, because this person is going to handle this debtors ledger, and he's going to do up this debtors account for me. How is this person going to do up this debtors account? For example, debtors Ali account. Every day he will um, monitor. He will monitor all these. He will extract the information from the book of prime entry. Okay, for example, on 1st of January 2005, Ali purchased $200 of goods from me, and then he will extract this information and put it inside this Ali's debtors Ali account. So this is sales that he extracted from the sales ledger. Then he will also look into the cash book. He will also look in the cash book. Okay, so this one is okay, receipt from Ali. Okay, cash receipt. So he will record it. He will record it in the debtors Ali account. So then he will have the ending balance. And then also you see, like for example, debtor Mr. V. So this information he will take from the book of prime entry. Okay, so this one is the sales journal. Okay, Mr. V purchased on 1st of January 10 packets of sugar. So he will record in this debtors Mr. V account. Then after that, he will also look from the sales return book. Okay, sales return here. Okay, Mr. V returned $1.50. Okay, so then he put in the sales return book. He will also look into the general ledger. Okay, look into the general ledger. Okay, the general ledger says that okay, bad debt written off against Mr. V's account because there's a dispute. So this $10 is written off, is foregone from Mr. V's account or written off. Okay, so it's written off against Mr. V's account. Okay, bad debt written off. That means the debt is not collectible. So it's written off. So then this is Mr. V's, how much Mr. V owe us on 1st of February 2015. So that means we expect like this person taking care of this debtors ledger to do up all the individual debtors account, and all the information is extracted line by line from the book of prime entry. Okay, so then this person will also will also at the end of the month, or at the end of the year, he's going to list down all these debtors, okay, for list of debtors extracted from debtors ledger. So at the end of the, probably the boss of the month will get this person doing the debtors ledger to extract all the balance at every month. Okay. um okay, so in A level, you're expected to know what is debtors aging schedule. So as the boss of the company, um I may want that person taking care of the debtors ledger to do up this debtors aging schedule. So that means this is the total owing by the debtor. I want the person to out of this 16,206, how much is owing within 1 month, how much is owing within 1 to 2 months, and how much is owing for more than 2 months. Because the thing is, okay, because the thing is, you see, I hire this person, okay, debtors, to take care of the debtors ledger or accounts receivables, because I want him or her to do up the debtors ledger nicely, and regularly call up the debtors to pay us promptly. Because the thing is, if you don't chase the debtor for payment, probably they will drag this amount owing for 6 months, 1 year, and then the company will have cash flow problem. So I want the account staff to every week or every month call them to ask the customer, to ask the debtor to pay up the amount promptly. And then the debtors, the accounts clerk or the accountant in the debtors company may say that, oh, for example, oh, this one we pay already, or we didn't owe you so much or whatever. So this person taking care of the debtors ledger, he have done all the debtors account neatly and nicely. So you can always look into the debtors account and explain to the debtors that this is not true. You have not paid us, and probably the debtors may say that we did not owe you so much. Then he can explain to the debtors, yes, you did. On what day and what day you order what and what from us, and we have the proof here. So you see that this person taking care of the debtors ledger will have this role of sorting out these disputes with the debtors, and making sure all the details are correct, and explain to the debtors if there's any dispute or anything, and also call up do up the 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 list of debtors at the end of every month or end of every year, depends on the company, what the boss wants. Okay, and also do up the debtors aging schedule. You see, if the debt is too old, then you have to call up the debtors more regularly, and make sure they pay up all the older debts. Okay, pay up all the older debts and make sure that it's not overdue for too long. So if the debtors don't pay up, probably he can advise the boss to stop selling on credit to this customer, for example. Okay, so this is the okay, this is the role of this person, the person taking care of the debtors ledger in the accounts department. Okay, so now you understand what is debtors ledger. Okay, then I will also, as a boss, I will also want to hire another person to take care of the creditors ledger. Similarly, creditors ledger is to record all the individual creditors account. Okay, I'm not going to go into the details. In part 2 of this lesson, I will show you some sample past year exam question on creditors control account. Then I will show you how to do the creditors control account and all this. Okay, so creditors ledger has the similar role, is to record all the details of the individual creditors. Then the person taking care of the creditors ledger should also list down all the creditor balances, and similarly, you will have all the suppliers, okay, calling us to chase us for payment. Okay, and then also sometimes they may have make mistake over their side, that because the goods were returned, or the goods were not delivered, or the goods were paid, but they claim that we have not paid. So this person doing the creditors ledger would also have to be very meticulous to make sure all the details are correct, and also if we have already paid the amount to them, we don't pay again just because they call us, because their side make a mistakes. Okay, the supplier side make a mistake. So this person have a role in doing that, to make sure everything in order before making any payment. Okay, and don't make the payment too early, because if the company make the payment too early, before it is due, then the the company may face cash flow problem. And don't pay too late also, because if you pay too late, then the supplier may refuse to continue supply to the company on credit. Okay, so this is the role of what the person taking care of the creditors ledger should do. Okay, so now I have explained all these other ledgers. Okay, so you see, what is the purpose of the control account or the debtors and control and creditors control account in the general ledger? Okay, so you see, the thing is, I'm the boss. I have hired three person, one person taking care of the debtors ledger, one person taking care of the creditors ledger, and one person taking care of the general ledger, which includes the control account, the debtors and creditors control account in the general ledger. So if the debtors total balance in the debtors control account, and the debtors total balance compiled by the other accounts person, the person taking care of the debtors ledger, the total given to me by the by this person is different from the total given to me by this person taking care of the debtors and creditors control account. If the figures are different, then there could be errors, or there could be fraud, because two-person doing the work, okay, giving me different figures. Then if the figures are different, then there could be fraud or errors. So the boss, it would so the person doing the control account will help the boss check for fraud and errors. Okay, and then the purpose of the control account is not to overload the general ledger, because all the individual debtors and creditors account are put in the debtors ledger and creditors ledger. So if you don't have a debtors ledger and creditors ledger, I mean, if you don't have a control account in the general ledger, you put all these all the individual and debtors and creditors inside the general ledger, then the general ledger will be overloaded with all the individual debtors and creditors. So so that means now, in this way, we in the general ledger, we just put a control account, and then we have a separate book for debtors ledger and creditors ledger, that will not overload the general ledger. So the control account for debtors and creditors, um, okay, the control account will help obtain figures quickly for preparation of final accounts. You see, the thing, the person doing the general ledger, he will obtain he will just get the year-end figure from all the book of prime entry. Okay, he will just turn to the last page of the sales journal to obtain the total credit sales, and then the last page of the sales return journal to get a total sales return, and from the cash book, he will total up all the cash and check received from debtors. So in this way, he can obtain the debtors figure quickly for the preparation of the trial balance. Okay, whereas the person taking care of the debtors ledger, he has to extract the figure line by line from the book of prime entry, and then after that he have to compile a list of debtors balance and present it to the boss. This will take more time. If there are many transactions, this process will take more time. So the purpose of the control account is to obtain figures quickly, obtain the debtors and creditors figure quickly for preparation of final accounts. And then another advantage of control account is to enable segregation of duties. So the person taking care of the general ledger will will do the debtors and creditors control account, and then the debtors ledger is taken care by one person, and then creditors ledger is taken care by one person. Okay, so the purpose of control account at is to enable segregation of duties. Because when you hire people into your company, you have to think of what to let them do. And then whatever you ask them to do, it's best that you, if there's a way that you make them responsible for that section of the work. So by having a control account different from the debtors and creditors ledger, okay, one advantage of this is to enable segregation of duties. Okay. Okay, so now from all this ledger, we will compile the trial balance. Okay, just now we explained that from book of prime entry, it's very difficult to compile the trial balance and the final account. So with the ledgers, with the general ledger, and then the debtors and creditors ledger and the cash book, we were able to compile the trial balance easily. So you see the from the for example, from the general ledger over here, we have the stationery expense uh, for putting into the profit and loss account easily. Okay, we can take this figure and put it into the profit and loss account as stationery expense. You see this one, I've compiled the figures so that I can um, do up my profit and loss account and balance sheet easily. Okay, before that I will list down all the balance in the trial balance first. Okay, then after that I will do my profit and loss account and balance sheet. Okay, so um okay, so uh if you want to have all these notes like what I have uh explained to you in the trailer, you can purchase from us. But you see the notes is not very long. You can rewind the video again and copy down the notes because it's not very long. When you copy also, you can remember clearly. You can pause the video and then you can copy down these notes. It's just very short notes. You can rewind the video again and you can copy down all these notes. It's not a lot. Or you can purchase from us. So thanks for watching. Please also watch part 2 of this video. Okay, thank you.